The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
As we come back to another excellent edition of the Power Trading Hour, it's me, your humble but lovable and squeezably soft host, David White, for another wonderful edition at TFNN.com, your headquarters for technical trading and investing. We've got a very interesting day showing up here, and we're going to get into it fairly quickly. But off the 3.5 points on the S&P cash, wouldn't think a whole lot about it except extremely light volume. We have 1.75 billion shares on the consolidated New York Stock Exchange tape, and kind of going into earnings week. Starts on Tuesday with Alcoa. And just hearing a lot of information in the financial infotainment cable stations today, flipping around to them, finding out what they are telling the truth about and when their nose should be growing. There's a lot more nose growing over the last couple of days, and we're going to talk about some of the issues that are being brought up and some of the things that they just don't have a clue to being. Of course, they're reporters. They don't put money at their own money on the line, so they really don't know on a lot of these things. Sometimes they're dumb. Sometimes they're stupid. Sometimes they are just complacent and lazy. It's a busy day to fill 9 hours or 10 hours a day worth of financial news, if you're not talking about individual stocks like we do a lot here, and problematic to find out that you've got to fill that time with something compelling and sell those ads no matter what. But it is all of that and more, but very light volume today, and I think I've got it in one of my slides, so I'm going to get to that in just a minute. But hurry up and wait right now for numbers in the morning, but my guess is we're not going to see any more volume anytime soon. And if you saw some kind of close back below 1880 on the S&P cash today, you really want to be very careful about the potential open in the markets in the morning. So as always, you can call me at 877-927-6648. You can email me at path@tfnn.com, and I'll try to talk about your particular stock or what you would like to talk about. Or you can post a message in the den. So we've got a triple threat version, or a trifecta of ways to get information to me, and we'll try to comment on it. Of course, on this day in financial history, Priceline.com, which had gone public at $16 a share exactly 1 month earlier, closes the day at $162, giving the tiny internet company a 1 month return of almost a little over 900% and a total market value of $23 billion. It's probably the fastest and stupidest stock run-up yet recorded, but it's all downhill from here as Priceline.com ends up losing 99% of its value by the end of the year. And what else can you say? Now, all these years later, not a bad value, but maybe something you want to think about, especially as we talk about a lot of IPOs and recent IPOs biting the big one today. So we'll think about that. Also in the news, this is the day that Judge Thomas Penfield Jackson issued his final ruling on Microsoft, and saying that it had violated federal antitrust laws. Microsoft stock plunges another 15%, shedding $80 billion in market value, and the Nasdaq suffers one of its worst days ever, plunging 349 points or 7.6% in one day. Whew. It was a wicked time, boy. I remember, being fairly new only been trading full time for a couple of years. Haven't been able to see enough cycles go around, and it was quite eye-opening. You didn't want to be long or short of stock more than about 5 minutes during the day. In fact, you could probably make in 5 minutes or 10 minutes in a lot of those days what takes an entire week to make now. If you were right, or you could lose all of it in a matter of 5 minutes. It was a wild day. I remember, especially right around that period of time, there was a preacher in downtown Tampa who opened up his church on, Tuesday nights, had people, all kinds of people fly in. There were 1,000 people showing up for his get-togethers on Wednesday night. Can't even remember anymore. I don't know if it even exists anymore, but we had 1,000 people. By the end of 2001, that was down to about 150 people, and I think I went in late 2003. Boy, does that sound about right? There was maybe 50 people. So certainly the bubble had burst, and everybody that was big into seeing what a true bubble from the inside looked like. All you had to do was go to those meetings and count the people and count the dubious ways that you could make money from people that flew in to give speeches about how everything was supposed to work in the stock market. Anyway, when we look at volume, we talked about that in the morning. I was adding positions this morning, sometimes not fast enough to actually get them out in the email. These things, like I said, some of these things were melting faster than ice cream on Georgia asphalt in the middle of July, maybe middle of August, depends on where you're at, but I'm going to say middle of July. Boy, these bounces just evaporated. We're going to go through that a little bit, but 230 million shares by 10 o'clock. We should have had 550 million shares. I am not surprised we rolled over here. We are probably waiting for news in the morning. That no big surprise. I just can't see that we're looking and hanging on these numbers like they're all in the be-all. I have a feeling that this is much more an issue with there's just not enough people here wanting to buy at the highs anymore left over. With QE coming to a quick close this year, and at the beginning of next year, interest rates starting to rise. But other things could happen, but I don't think so at the moment anyway. Japan's Nikkei gained 0.8. Hong Kong Hang Seng added 0.2. The Shanghai Composite fell 0.7, and it is really being pressured over the last few days, if you've been watching, on the real estate names that continue to get beat up now that they let a few of those guys go belly up. Of course, high-frequency trading on most of the financial infotainment shows, and they're getting a few things right, most of the things wrong. Of course, today, the next chapter in that saga starts with Charles Schwab coming out, issuing a letter. And, of course, he's promptly attacked as being part of the problem himself and just trying to get out in front of it. The question is whether or not he should turn down money for order flow when they're basically going to get that data anyway. The question is, should he throw away free money to his company? It is a structural issue. But he called it a cancer this morning, sent out a letter to all of his users. High-frequency trading has run amok and is corrupting our capital market system by creating an unleveled playing field for individual investors and driving the wrong incentives for our commodity and equity exchanges, he said. So, interestingly enough, though, he has enough customers that can really get this going. There are a few other things that happen that I don't have slides for. We'll try to get to for the rest. If you want to read the rest of the letter, it's on thewallstreetjournal.com. But man, we had a bunch of stuff happen today. It's a huge news day. But interestingly enough, Okay. Probably the most interesting thing, we'll finish this flash crash thing up, is that Interactive Brokers, they are a broker-dealer and in full compliance. They are the broker I use. You've always been able to route to any particular market you wanted to on their site or through their platform. What they are doing, and we'll be talking about this afternoon, is offering a new little button. If you click on that button, it'll take you right to the IEX exchange, and you will not be skimmed by the high-frequency traders. But always interesting. And, of course, they're finally getting to the real issues surrounding high-frequency trading, which is their ability to quote stuff, slow down the system so that you get extremely laggy data, not even just a few milliseconds or 5 milliseconds or a second off, but if they can slow down the systems to get a 5 or 10 second advantage, they are certainly doing that too. And I think a lot of people should be talking a lot more about that. But if high-frequency trading wasn't allowed, the quote stuffing probably wouldn't happen either. And a lot of problems would be solved. What else do we have out here? Google split today. Not a huge movement out here, but it is 2 for 1. Don't be surprised when you look at it at $576. It didn't fall apart, although it's probably not going up a whole lot. A Fed governor, Stein, is resigning. He says he's going to go teach a school. That only leaves 3 on the board, with confirmation of 3 others still hanging out in the balance. I'm not exactly sure. I don't buy the whole I'm going back to teach school. There's something else going on here, but I'm not exactly sure what it is. Maybe he doesn't get along with Yellen or somebody else on the board, or maybe he's just tired of the whole thing. And, of course, this morning we had Draghi out, and he basically started talking about a QE for Europe, and that got the dollar really moving, and the dollar index is up almost 25 cents today. And I have a feeling that we're going to probably had a false breakdown under that $80 level on the dollar index, and we're probably now getting ready to go make another run and try to make it up into the probably around the 84 level over the next few months. That's probably going to put more drag on this market than QE and or higher interest rates, but we'll have to see what's going on that. Citibank, there's going to be somebody going to jail. We've heard enough from this is Preet, P-R-E-E-T, about this, the prosecutor in that southern district of New York or Washington. But we'll talk about this a little bit more when we come back. And, again, you can call me at 877-927-6648. Hopefully we are back now. And we had Kay Rico on the phone. I don't know if he's still there. Maybe he can patch me back in. You there, Kay Rico? Don't know. Don't hear anything. He wanted to talk about Twitter, so maybe we'll talk about that after the break if he's still there. But, yeah, we'll check it out. Okay. Anyway, he wanted to talk about Twitter. I'm not exactly sure what he's looking at here. We were talking about Citibank. Of course, this is going to be a tough one to play. I would warn anybody from getting anywhere too close to it. Oh, Kay Rico is there. Hello, Kay Rico.
Yes, sir. Working through technical difficulties. We're back together.
Yeah, and we're going right to the commercial. So if you want to hang on through the break, we'll be right back, and we'll talk a little bit about Twitter when we come back. Thanks.
Take your time.
We'll be back in just a minute. You can call me also at 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we are back, and hopefully we still have K. Rico on the line.
Yep.
Okay. So what do you want to do here with Twitter?
Okay, can I just for 1 second ask you, I'm trying to, I just pulled in a little while ago, and I'm looking for the new symbols for Google, and I was wondering if I could save a little time, maybe you could help me.
What about it?
No, the symbols.
Right, Google's still Google.
It's the same symbol, G-O-O-G, and isn't there a new Class A or something?
There are, but are you buying the stocks, or are you just looking at the quotes? The quotes are going to be the same. The stocks are going to trade basically one for one. You're not going to be able to buy those A-class shares anyway, so there's only going to be the other stocks that are actually trading.
Okay, so it's the basic GOOG.
Yep, it shows up. I checked it about an hour ago.
Yeah. Okay, now that I'm looking at it on a chart, it looks like it's mangled from the split, so wait for it to get settled.
Yeah, they'll be fixed by the end of the day.
Yeah. Okay, cool. Thank you for that. Listen, if we get cut off, we're having little aftershocks from the earthquake over in Chile. We're affected over here a little bit, so it's really strange what's going on.
Yep.
I thought when there was a dead signal there for a while, I thought it was on my end, but I think it was on your end.
Yeah, no, I think the PC in the office went belly up. They reset it, and we were back to running again. So, what do you got here on Twitter that you're interested in?
Well, I missed my opportunity when it was at $54 to short it, and now I guess I'm thinking, where's this next thing headed to? For a bounce, maybe, or what do you?
It's probably headed to $38.
Yeah, but do you see a bounce first?
No. I don't think so. I thought maybe we'd get a little bounce, but when I'm looking at other stocks out there besides Twitter, like Facebook today, and probably closer to this would be Tesla. This thing on Tesla was up strong in the morning, pretty much reversed all day long. And, this thing I was wanting to pull the trigger on it, and I wanted another $5-10 on it. Maybe we get it in the next couple of days. But I'm seeing some stocks actually being supported and defended by Wall Street. Some, they're just giving up and running and saying, run, Forrest, run. And, like Netflix, doesn't look like there's a whole lot there. There are a few people trying to support the stock, but mostly every time it bounces, there's somebody's trying to sell it. And while you had a couple of days in Tesla here, I see everybody coming back and trying to sell it again. So if you're not making money, or if that money's not real, these stocks are getting hammered. And if you look at like Facebook, the company they just paid way overpaid for has been down majorly twice in the last couple of days. And that really is starting to hit this company today. I think most of the damage in Facebook is from that. But a lot of these companies don't have a real model for making money, or a long-term model, or their model is in jeopardy. Facebook looks like their model is in jeopardy. Twitter never made money, TWTR, and doesn't know how it's going to make money, I guess. Maybe they're going to come up with a couple of days that say they are, but I've quit using it. So, I don't know a lot of other people too. Everybody wants to use Snapchat and Instagram. So it's kind of a fickle market out here. But when I look at a lot of these stocks out here, I think... Did you just get eaten by a whale?
Yeah, we got some bad buses a quarter mile away that echo through my building.
Okay. But, I think this thing's probably going to 38. I think you're going to see a few of these stocks hit bottom, and then they're actually going to start being supported by Wall Street. And then we're going to probably see the second wave of stocks start to sell off. But that's what I'm thinking right now.
So you kind of like Tesla, it sounded like, pretty strongly for a short eventually.
Well, I was short it. We were shorting it, what was it, 240 or 250? 250.
Yeah.
So I got it on the first way down, covered it a little too early because I really didn't know how deep it was, and the market was headed higher. And it continued to roll all the way down at 207. I tried to short it this morning. There was several stocks out here that are just worthless stocks. I wanted to get Pandora short this morning, and before I could put it in the newsletter to send it out, because we'd been short it in the Tech Insider before literally in about 2 minutes. Well, I sit there, click the button, I short it, I start typing up my newsletter, and the thing's rolled over. It was down like $1.50 before I could blink. And any of these stocks that aren't making money are fair game right now. And Pandora's a loser. They came out with the news that they were getting even more listeners. The problem is that every listener costs them money and they lose even more. So why everybody would think it was better, it didn't take more than a couple of minutes for this thing to come back in and get hammered again. So they're not giving you any opportunity to get these stocks. I mean, when they bounce like Tesla, you got about 2 minutes to short these things at the highs, and that's it. They're not spending any time there.
Okay. Hey, thank you, Dave.
I would say take the safeties off. It's time to short at will. Okay. Thanks for the call.
Thank you. Sorry for my background noise. Thank you.
Okay. Anyway, we're talking about Citi, and this is a very interesting story to me in that not a lot of reaction so far, but I'm thinking you could see a lot lower in Citi. If you watched the news last night, a little bit this morning, the big hotshot new sheriff on Wall Street is saying that there are going to be Citi executives going to jail on this one. And he didn't name them by name at Citi, but it's pretty clear that at least their branch down there in Mexico was doing a lot of dirty deals. At least that's the news or what they're reporting, a lot of dirty deals with the Mexican drug cartels. And it does not look like this is going to be anything that comes over and is over anytime soon. So if you're looking at Citigroup, that's it. Again, someone just brought up IBB. It's on my list of these stocks that you had about 5 seconds to short. This thing, again, getting hammered. Any of these things that were obvious balloons just won't quit. Now, am I shorting it down here? The answer is no. There are a lot of stocks, I think, like I said, that have that are maybe break-even stocks, not the pie in the sky that we saw in IBB and some of these other ones like Tesla and Netflix. We're getting now ready for those I put some new shorts in the news letter over the last couple of days, and we've seen a couple of those already start to roll over fairly well. In fact, I haven't had a chance to really go through them here since the start of the show. But I think that there's a lot of weakness out there in some of them. I had a Gartley play in one of them. It's down $1 since we started it, so 1-2%. But a lot of these stocks tried to rally intraday, coming back. And, of course, any close below 1880 out here would be a fire alarm, especially with the ridiculously low volume we've had now. We're off 7 points on the S&P cash and 1.96 billion. Yeah, 1.96. Yeah, that's right. 1.9. We don't have 2 billion shares, and what is it? We're at almost 245. So we're showing we're going to do about 2.6, 2.7 billion shares. Got just over 3 billion shares yesterday. There is no volume comparatively, even if we just look at the last couple of months up at these highs. You need to be extremely careful if you're going to be long. If you are going to go long in the next week or 2 weeks, I would make sure that you hedge or you buy some downside protection. The VIX is only at 13.5. You can buy very, very inexpensive protection out here. If you do want to hang on to some longs for whatever reason you think I'm wrong, I would probably at least hedge those long positions. But I'm thinking we could have some very fast markets fairly quickly. Netflix is another one of these that tried to rally today. We talked about that. It was up to 365 in FLX. This thing's headed to 330, probably with a rocket to fill this gap, I imagine, the next couple of days. And again, you're probably going to have a very decent support on this thing. This one's probably going to be a short candidate for the next year, year and a half, maybe, as it goes and fills all these three gap plays that are underneath it. In fact, it could accelerate and blow itself apart. But right now, you're going up against a low out here with 13 million shares. We've got about 2.1 million shares. So we're in the first line of support on a lot of these things. And, yep, it's going to fill these gaps probably in the next few days. But don't be surprised when these things hit. But you could get back up to 390, maybe even $400 on Netflix on the next round up. Like I said, I think most of these things are just going to go sideways. Down here that have already blown apart, and we're going to get that next round of selling that's going to bring us off the highs of these S&Ps. So just keep an eye on that. What did we have out here? I had a lot of stocks making news. Joy Global been one, especially I know everybody had been talking about CAT for a while. Joy Global, kind of the same kind of thing. I like this one. A nice little doji out here today. 3.4 million shares on the November 7th at 59.35. We're getting into that with half that volume today and a nice little one. GMCR. Had a question about GMCR as a short. No, I would not short it. It's still got an amazing short interest in this thing, and the rather dubious story of Coke getting together with them. There is a better play in that space, and if you got my newsletter, you probably found it. The problem is that Coke owns enough of those shares probably to support that stock for a while. Even if it's a horrible stock and a horrible company, it's not going to matter. You know, can you get back to $100? I think you can, but to me, that's not enough. There's stocks that can fall all the way and fill those gaps down to 80. I just don't think you're going to see that. What did Coke buy it at? 87? So you're going to see probably even Coke itself with 10% of the shares come in and try to support Green Mountain Coffee Roasters. This is going to be one that's probably going to take a long time to develop as a short play out there. There are a lot of stocks up here at these high levels with light volume. Beeve Aerospace, not a bad looking one. I just thought that there were better plays than this, but there's still just beautiful setups up here at the high. BEAV, when we go back and look at the last major high on that one was November 26th with 6.1 million shares. We had basically 830,000 shares, so 1/6 the volume yesterday. This thing's hanging up here. The energy to the high wasn't all that exciting. Deluxe, DLX, another one of these up here at the highs with no volume. Last time we were up here was January 23rd, $54.24. 700,000 shares, and we're getting into it today with, 210,000. You just got to watch out because I think, who was it? I think it was John in the Den about trapdoor selling. We are up here with such light volume on so many stocks that it's going to be very problematic to go back and figure out, anything going on out here. So it is, like I said, I saw a lot of stocks moving just incredibly fast. If I hadn't clicked very quickly, I would have missed some or many of them. Trying to get on as many as I can in the newsletters over the next day or so. But I think we've got fairly decent signs. There is a trouble in paradise. 2 billion shares now on the New York Stock Exchange. Again, you can give me a call at 877-927-6648. You can email me at path@tfnn.com. We'll check the email, which I'll do right now. I'm watching XLF. Down volumes, but it looks like it may want to close lower than yesterday. Okay. Justin wants to know whether he can be short the financials. I don't think you have anything to worry about, especially with Citibank. Citibank's going to be wrapped up in these legal troubles, and that's probably enough to keep these financials from going any higher. I'd say you're clean and cleared to go. We'll look at those numbers on the FAS when we come back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
And we're back to my email here from Destin. He was talking about basically looking at the financials short and going along the bear 3X shares, which is the FAEZ, excuse me. And I'd say you're clear to go. You had everything you wanted, a lot of volume, 9.1 million shares back on the 21st. You've gotten into it today with the 2.8 million shares. I would say probably put in a stop. You don't want this thing probably to close below maybe 1867. If it goes in there intraday, probably not a big deal. You just don't want it to close below that. So you got a very narrow risk reward on this thing. And like I said, with Citigroup out of action, and I'll guarantee you these prosecutors don't say what they said in the last 24 hours on Citigroup unless they've got the smoking gun. They're not just going to go whistling Dixie. There are people at Citigroup that will be going to jail. And I don't think it's just the guys in Mexico. My guess is it's going to be people in the United States too, and probably a lot of people looking the other way to make profits and dealing with those cartels. So I think you're fine. I think this thing probably going to pop up fairly quickly into that 21.5 range. And if the markets even turn at all, I think you got a very good chance of hitting that 25, probably a lot quicker than it came down, maybe a fourth or a half of the time. So I like the play. See if I have anything else going on here. And we're off 6 points, 2.04 billion shares. So this is going to be a ridiculously light volume day for numbers that really aren't that terrific or market moving. So, maybe you get a gap up tomorrow, but I would say worst case scenario, you get a gap up, it's going to be 10 points. If you get a gap down, it could be 10 points to 50 points. So just be very, very careful with such extreme light volume going into a Friday where we can't find anybody wanting to jump in really in a lot of these names like Netflix and Tesla and all the over-bloated, probably extremely distorted business models that people have been pushing up. Again, the market's job is to push paper out. When they give these new IPOs, of course, they all get shares at reduced price. They have to hold them for a while. And there's, of course, a huge interest in them ginning the price up, both to get the business in the near future with other companies going public, but also for those shares they have to be sold at a very high price. Like I said, we've got Alibaba sitting in the wings. Probably a couple $1 billion to be made when that IPO goes public, if it does. But probably they can make $5 or even $10 billion on the backside with the shares that they're going to get. So just be very careful about at least the next week out here, because this volume is ridiculously low at highs. And we push one more time at those highs. I don't think the news tomorrow was really that significant. And any close back below, probably going to have to see 1868 to get any kind of acceleration on the way down. So we'll do that. And we're looking forward to Andy. He is back in just a minute. A message in the den. Tony Montana Banks at Citi. I don't know it for a fact, but boy, when the prosecutors start blowing like that, normally they've got the goods. So be very careful, and I like that financial angle, and I'm looking for more stocks to short, so maybe we'll find something in there. Well, we'll be back tomorrow, same bat channel, same bat time. Sell when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.